All right, friends, welcome to today's daily recap. We had another really crazy day here in the market. I think that as I think about just where the market is at, the term euphoria comes to mind. We're going to take a look and spend a lot of time here in the S&P 500 this evening because I think it speaks to just the buying power and the buying pressure that we're seeing here. First things first, we very much have crested over 3,000 now. Last 2 days we challenged. We have crested over. We should very much see 3,000 as major support now, as well as this 200-day simple moving average, which is 299.65. We had a lot of things converging on SPX 3000 or SPY 300, but now we're really entrenched. And so I think that for folks that are short, right, I mean, there's the potential that we see this acting as major support. So we'll see what happens. We're above the 200, above the 50, above the 9 EMA. One thing that causes me pause on this rally is our fractal energy scan is moving in the direction of being under our 38.2% level, which tends to mean that the current run will at least lessen its magnitude. Why is this important? Well, because we've been up over 11% in the last in the last, what is this, 9 trading days. 11% in the last 9 trading days. We're going to see that significantly lessen. We're going to see that significantly we're going to see that slow. It's just unsustainable, and our fractal energy scan is telling us that. So on the daily, really watching this 3,000 level again. That is really where we're going to be spending so much of our time. Let's go into the day, or the 5-minute 5-day 5-minute. Okay, so we hit a 5-day 5-minute high. Let's just take a look at today. So right at 6 o'clock, we see a high right here of basically 304. And then by the time we reach 11 o'clock, we've gone to a bottom on the day. Just intense selling pressure from an open of, what is this, 302, right? So from an open of 302 all the way down, and we just see, right, just getting pounded. But then intense run up. I mean, we look at this. I mean, we could count the red candles versus the green candles, and then you just see in the last half hour, this action reminds me of in the middle of the virus. It must have been, I don't know, maybe March the 13th. In the last 30 minutes when President Trump did the press conference with all of the CEOs of various companies, and we saw a $10 move, whatever it was, in the last 30 minutes, this feels very similar, right? Just massive candle. We got all the way up to 304.25 in the after hours. Of course, now we're seeing a little bit of that, a little bit of selling pressure right here. But that is just really where we're at. But I think that seeing this level of buying pressure throughout the day, right? Just, I mean, this intense pressure on really not a ton of volume. Got big volume bars here. And I think that's important. So I think that we're just, as we're watching the S&P 500, we've really got to pay attention to days like this in the intraday where we see these types of just significant moves. Okay, now let's juxtapose this massive move, right? This on the day, what was it, 1.5% move? Let's see if our Qs tell us the same story. They don't. And so again, we talked a lot about yesterday having and seeing this transition out of tech into securities that are opening, we see a pretty massive doji here. I'm sorry, hammer candle. And so we see this, a lot of buying pressure again. So even though we were only up 0.5%, a lot of buying pressure here. A lot of buying pressure. We challenged this low on higher volume and pushed forward. That feels like a pretty significant candle. You know, we get in massive gap. You know, at some point we're gonna need to get back here and fill this gap. We got this gap down here too. You know, at some point we're gonna challenge those, but the Dow up 2.21%. And finally, what has been just crushing the market, 3.11% today. This was a box that we had for a really long time, and we'll see how we challenge this old resistance. So this is really where we're at. I think that the VIX, though, tells us a little bit of a different story. Take a look at this candle. It's a hugely important candle. Hugely important candle, and here's why. So even though the market was up, our volatility traders, and in particular our put buyers on the SPX, weren't convinced that this was legit. So, you know, as we wait for all of this data to come in, let's just see what today's option statistics were. I mean, look at this difference. Look at this difference. 2 million calls versus 3.2 million puts. Significant. It's really significant. And so, pretty significant put to call ratio here that we need to pay attention to, even though we're continuing to go up. Continuing to go up. Now, we go to the VIX. And of course, the put call ratio on the VIX isn't always great, but more calls. We've got more calls. So I think that as we're paying attention to the VIX and VXX, it's going to be important for us to watch, watch what happens here. So, you know, looks almost the opposite of our Dow Jones Industrial Average. All right, let's get into what our current positions are and just take a look and see if there's anything to note. EEM relatively unchanged, which is good for my positions. EWZ is interesting to me because we were up almost 5%. EWZ has actually given me the opportunity a little bit to get out of a couple of positions. So is EEM. I've got some really strategic positions on in EEM. You know, just from various ladders and taking things off, and you know, they both have the opportunity to pay out really nicely. FXI basically unchanged on the day, keep going down. GDX is interesting, and I find this candle really interesting for a couple of reasons, and I think that we're going to see the same thing on gold. Yeah. So we see in both GDX and gold, and I bet GDXJ, we'd see the same thing in GDXJ, and we do. We see a gap down, right? We see a gap down, and then we see significant buying pressure throughout the day. And so it makes sense. It makes sense as we think about the inverse relationship between GDX, GDXJ, gold, GLD, and that's that there's an inverse relationship with the SPX or the SPY. This is an indicator that folks still aren't buying this rally and they're transitioning away. So we see some pretty significant rally decline in our gold style positions, silver too. And what we're seeing is that we got down due to the fact that SPX rallied, right, overnight, significant rally overnight. But then when we think about the fact that folks weren't buying that, they were transitioning into what are considered safer havens, and so you see that type of transition into gold, and that's exactly what we're seeing with these candles. And eventually, you know, GDX didn't make it green on the day, but gold certainly did. IYR, I don't understand this pretty significant move since the 14th, from 66 to basically 78. Got a number of positions in IYR that I'm watching. SPY, I mean, we've talked at length about SPY. TLT, you know, TLT is interesting. pretty wide movement in TLT today, but not a lot that I want to take from TLT yet. XBI, really interesting candle, really long wick there on the downside. XHB. The one trade that I made today was a credit spread in XHB. And I'll tell you this. XHB, and I consider that a laddered position and not an opening position because I'm trying to build and show that you can build credit through really unique ways of either laddering or adjusting positions when the market moves. And you always want exposure in your original positions, but then you want the ability to ladder and to adjust. We're up $10 basically here in XHB, more than $10 now. Since what is this, the 14th? The 14th seems to be a low on the lot. We got our overbought to get in on our shorts. We see quite a few XRT, XHB that we like to trade there. So we see that. But this moved a lot, 4.5% basically. That's a huge move. XLE. XLE was interesting. We'll see if we begin getting a retrace here. This looks a little toppish to me, but I want to wait for confirmation here. XLV, up 1%. Not really worried either way. Healthcare. We'll continue to watch this. XLY, I'm beginning to get a little nervous in XLY. I think that my positions here in XLY are for July. That's what I'm kind of hoping for. Nope, September. Okay, so we got these positions on in September. Our expected market move is it's challenged here. We'll see what happens. But as I just look at this position, clear upward trend, but we'll see if we get to a place where we start moving sideways again. XME is another one that I've struggled trading XME a little bit, but really I'm just looking for this move back between 18 and 20. If I can get that move back, even though I don't know that it's going to happen because we're above all of our major moving averages, with the exception probably of the 200. I don't have it on. But you can see the trades and kind of my marks. XRT's up another 3%. This is one where there's just not a lot I can do with XRT since it is moving, this much. 35 to 42 in XRT when you go and your expected move is let's go here. It becomes a little difficult to trade when your expected move for 50 days, right, is $4, and we've moved $7, almost $8 in the span of 9 trading days. Yep. So we'll see what happens. Just continuing to ladder there. So I think the takeaway from this, as it looks like we're gapping up a little in XRT already as well, is that a lot of moves in some of our specific sectors in the S&P. So the S&P moved up 1.5%, but we see really significant movement in XRT, XME, XHB, right? So we're seeing really significant movement in these, which is adding to a little bit of that juxtaposition. And as long as we're seeing some of these sectors just skyrocket, they're going to do a couple of things. You're going to want to watch out for relative weakness, but it's also going to move the SPY, right? It's going to move the SPY. So that's where we're at. Those are the major securities that had a lot of movement that we're particularly looking at or trading. It also tells us, just taking a look at the market, S&P continues to kind of trail our IWM, our small caps, and they're continuing to move. But that the VIX isn't necessarily buying the action. The VIX isn't necessarily buying the action. All right, if you have any questions about what the market did today or just want to chat stocks, email me at Ryan, R-Y-A-N, @sellthatoption.com. Otherwise, we're going to try to end Thursday and Friday in the green. Here we go.